a lot of people will agree with me, I'm sure, listening. It's like one of the best, if not the best indicators that I've ever seen. So, like, was there a moment where you were like, oh, this guy just kind of told me a little secret, FOMO, whatever it is that day, that can still come in, even when you're somebody with as much experience as you. So could you just speak on that for a second? And then maybe any real tactical advice of like, what can a trader who is struggling with that do?
If I do that, then I know that maintain my discipline. I can do well in the market, and I don't have to be the winner of a stock trading contest or win prizes. My P&L is the prize.
P&L is the prize.
Eventually, will these gaps get filled? Sure. Let's talk in 2026, 2027, and you can say, hey, now I'm closing my short because the gap is filled.
After 80% drawdown.
Again, the markets will do the most obvious thing in the least obvious way.
Brian, you've been trading a lot longer than me. Anything you find that's a certainty? You want to share any certainties with us today to finish?
As soon as you got it figured out, you're going to get punched in the face.
I got to speak from the Top Step perspective. I know you've been doing some streams with them, and you have been influencing people more and more with the VWAP through you kind of like staying up on technology, getting on different live streams, doing different podcasts, and growing your brand. How important is it for you as you, I don't want to put you on too much of a pedestal, stroke you too much, but like you have become a pillar in the online trading space as someone who's got experience. He's a veteran trader. He's not only making money for himself, but he's helping other people. How often do you think about that? Like your influence? How do you perceive yourself? I think the audience wants to know, what do you think of it? The reach that you have and the impact that you can make.
I mean, I like the fact that I'm helping a lot of people. I don't take myself very seriously in that regard. I mean, I don't, I don't think I have an ego about it. I'm not the type of person who, worships actors or musicians or that sort of thing. We're all people. We put our pants on one leg at a time. And, this is something I've worked hard at. It's good to be recognized for the work that I've done. I've got a ton of experience. My lessons are hard fought and learned, generally the hard way. That's the way I learn things, and it's good to share those experiences with other people and help it, make it a little bit easier for them.
And I think you do a great job at that. For everybody that doesn't know, Brian has 2 books out. One of them came out, was it 2022 or 2023, Brian?
23, January
23.
23.
We'll make sure those are linked down below. Everybody, please grab the books, especially the new one. It's fantastic. I have it over in my closet. Let's talk about trading this year, Brian. When we did our first interview, literally like we were saying about a year ago, you said if 2022 didn't wear you out, 2023, 2024 would chop you out. Do you feel like that has kind of come to fruition? Has the markets this year surprised you? How do you kind of view everything? Because I know you're an individual stock trader. You don't trade the indices as much. So tell us, did that come to play? Have you seen trend carry well, or has the market been a little bit choppy as you kind of expected?
No, not at all. In fact, we broke out in the first quarter of 2023, and we had a good pullback last summer, but since then, we've had a fantastic bull market. That's why, when you talk about longer term, not necessarily predictions, but prognostications, I guess, or ideas of what the market might do. Nobody knows. I mean, nobody knows who's going to win an election. Nobody knows what the market's going to do. Nobody knows what the Fed is going to do. They don't know. They keep changing their mind. So, that's what's great about the time frame that I trade in. That I'm reluctant to get into those types of discussions because it's irrelevant to what I do. I don't care where the market will be. Here we are in June of 24. I don't care where the market is going to be 1 year from today. Even if I nail it and say, we're up 13.6%, and you can go back and say, Brian, we were up 13.6%, just like you said. How did you know? I didn't know. It was just a stupid guess, a made up number like everybody else does. And some people will try to, sound smarter, and they probably are because they look at, these spreadsheets and all that sort of thing. But, one of the quotes that I like to quote from Linda Raschke is, the markets will do the most obvious thing in the least obvious way. We know that this certain stock is going up, but if you buy NVIDIA at 120 and it drops down to, at 140 and it drops down to 120 in a week, you're losing a lot of money, and that hurts. And it might be the greatest growth stock of all time, but you're losing a lot of money and you're not sharing in this enthusiasm.
I love that answer. And you said it in the first episode, the cocktail talk. Well, that's fun. We'll have a drink. We'll sit around and we'll talk about where markets could be, what Powell will do, what Trump or Biden will do. But like you said, it's not going to make me money. You could have called it to the T. You could have called the exact price. But does that mean you did well between when you called it and today? Doesn't really
Exactly.
make, it's not a direct
Yeah.
correlation.
Calling it and trading it are much different things. A lot of people are good at talking about the market, but then trading it is a much different skill set, and that takes experience and it takes a willingness to abandon what you said on TV or wherever and say, hey, the price is flying straight in the face of what I said. Am I going to just try to be stubborn and say that I was right? And hold on to this thing and lose my money meanwhile and write it down 30%, but then it comes back and then say I'm a hero because I got it right and it did go up 13%, but I had to draw down 30% first. That's not a victory. That's just terrible risk management.
Yeah, and bad risk management and a little bit of luck if that's the outcome that you get after being down 30% in drawdown. Um,
Yeah.
you mentioned Linda. One of the questions I had come in from Twitter, I like to ask the audience when we do these part twos what they want to hear from you. People wanted to know who you look to as a mentor. Like I said at the beginning, because you have become the mentor to people even like me who share my journey and coach other people. So like you're the mentor to mentors. Go back even to like your penny stock days when you were doing the pink sheets back in the day, like we talked about in the first episode.
Mhm.
Are there any people that you just instantly start thinking of that were big mentors, and how do they interact with you now? Do you still talk to them today, or do they kind of pop in and pop out? Who stands out?
As far as books go, first of all, the first technical analysis book I read was Stan Weinstein's book, which was just
Mm,
the perfect book to read because it just broke it down so nice and simple, and it just immediately made sense to me. Then I read John Murphy's book, which is a little bit more of the, patterns and head and shoulders and cups and handles and double tops and that sort of thing. And those truthfully aren't as important as understanding market structure and then multiple time frames. So I worked as a retail stockbroker, as you probably recall, and the second firm I was with was Lehman Brothers, and I had probably about 4 months experience in the business. So I worked under a senior broker, and I was lucky to work in for the top producing broker in the Boston office. His name was Michael Collins. And he had a unique approach. He wasn't doing what Lehman Brothers, slinging all Lehman Brothers stocks. Instead, he had a strategy, which was simply to buy companies that reported better than expected earnings, but also marry it with the stock. So he used to get the daily graphs chart books. They used to come as a printed version, and he would have me, cut them up and blow them up for him, and then we would, look at the earnings and then basically buy those stocks. And I noticed he had a much better success rate than the stock of the day that Lehman Brothers was pitching. So I
mm,
gravitated towards that. So early on, I did have a lot more of a fundamental bend to it, but that was because I was, working with other people as a retail stockbroker, and the time frame can't be 2 days to 8 days.
no,
You started getting accused of churning the account, and the commissions
exactly.
start getting up way too high. So after I left the retail stock trading firm, I had a lot more patience than I do today. And I had a lot more patience with losers. So that's, it all evolves, but I still like to see ideally some good fundamentals, but I don't take them too seriously. I don't recall. I probably should have watched that interview that we did last time, our last discussion, Austin.
It's hard, I know, because neither of us likes to hear each other talk, hear ourselves talk. But yeah,
Just to see what we covered so that I don't repeat myself.
no,
But
it's
the
okay.
point I was going to say is, when I look at technical analysis, we look at a level of interest. We say it's pulling back to this anchored volume weighted average price. Am I going to just buy here? No, that's just kind of stupid. The 50-day moving average. I'm not going to buy just because it's at that level. I want to see it touch that level and then start to bounce. And as it starts to bounce and we get a little bit of momentum away from that area, well, that level of interest gave me the confidence to say, I'm going to buy here. But if it breaks back below that low, well, then I'm out. Same is true for fundamentals. They are a reason to be interested rather than a level of interest. They're a reason to be interested. So if a company is growing their earnings 30% on revenues of a 19%, then I'll look at that and say, well, does that matter to me so much that the revenues are increasing and the earnings are increasing? Maybe, I've told myself that matters, but why does that matter to me? It only matters to me because I know there are growth fund managers who control billions of dollars who look for these types of stocks. The stock that's growing the revenues, let's say 150%, and the earnings are up 300%. So that's good. That's good. They're selling a lot of their product. People like it. But what makes the stock price go higher is when you have more demand than supply for the stock at certain prices. The demand keeps going up until it meets that source of supply where it temporarily slows down, digests those gains. But what makes those people with the billions of dollars interested? The successful funds. They are buying the stocks that have good fundamentals because they're, so we know that there's, let's say 2000, let's say 800 good growth funds. They're all competing for the same merchandise. They're looking for the companies with the strongest revenues and the strongest earnings. That's what they do. And then if you marry it to a chart, well, then now we know we've got the best of the best. So we have levels of interest on the chart and we have reasons of interest. We know that these big institutions see a stock pull back to the 20-day moving average, to the anchored VWAP from a gap, that they're likely to be in there and start to say, okay, here's where I need to increase my exposure at this point, because it's typically a place that holds the support. Then once we start to see it bounce away from there, we get involved. And, if it breaks below that low, well, we've got to say, demand wasn't as strong as I anticipated here. I'm not going to continue for a drop down of the 50-day moving average, which is 18% lower. Instead, I'm going to get out right now and let it be somebody else's problem.
Love that. Great detail in that answer. I got a couple of questions to stem off of that. You mentioned in the episode, you did a podcast with the guys from the Compound, Downtown Josh Brown
Sure.
and
Yep.
Michael Batnick.
Yep.
Yep. Love their show. You said in
Likewise.
there, and you mentioned in the book, Warren Buffett with the guaranteed VWAP, Ken Griffin using VWAP. How, from your experience at Lehman and the years that you spent on maybe a little bit more fundamental leaning mentorship, a little bit more fundamental based analysis, how did you put all of this together to know how important the VWAP is? Like, what was there a moment? Was there a conversation with someone? They were because it's almost like the VWAP. A lot of people will agree with me, I'm sure, listening. It's like one of the best, if not the best indicators that I've ever seen. So was there a moment where you were like, oh, this guy just kind of told me a little secret and I'm going to go and see if this is something I can make money off of? How did you put this together?
I had first, found the VWAP, I think in 2003.
Okay.
And then I wrote an article about it in, I think, 2005, Chase the Gap or Wait for VWAP. And I had a lot of confidence in it from a short-term perspective. In 2014, I went to a chartered market technician, the Market Technicians Association event in New York. And I didn't know him at the time, but on a panel was Jay Woods. Jay Woods was a specialist on the NYSE, and he's quite active on Twitter, X, that sort of thing, and in the media a lot. But he made markets and stocks for years. So I had a question for him that was, how often do you see the 2-day volume weighted average price or the week to date volume weighted average price become a level that you see orders executed around? He said, Brian, no one's ever really asked me about the volume weighted average price. This is great. Let's talk about it. Come down to the floor of the New York Stock Exchange tomorrow and let me, listen to what people ask me when they're asking about the market. So they're saying, what's IBM indicating right now at 9 a.m. Eastern? You're there on the floor. And they'll say, instead, they'll ask what it's indicating. But they'll say, what's the VWAP? What's the VWAP? What's the VWAP? Because what they were doing is setting their programs based on what the VWAP is so far in the pre-market. They're setting their programs for the day because it changes slightly. Monday's volume is maybe 24% of the volume for the week. Wednesday's volume is 18%. I'm making these numbers up. So if they have an order to buy 100, it wouldn't be 100,000 shares, but 100,000 shares for the week, they'll buy 24,000 shares on Monday, 18,000 shares on Wednesday, and they want to adjust those programs so that they're participating in the average price. They're not trying to get better necessarily. They're just trying to be average. They're just trying to do as good as the market. So when he started showing me that and saying, Brian, most of the orders are VWAP orders, it kind of just gave me a little bit more confidence in what I was already doing. But to hear somebody, because I kind of thought I was crazy. I kind of thought like, I've been using this for the last decade or more, and now I'm seeing evidence that it's just not in my mind here. So it just kind of was like a light bulb moment. So I said to Jay, I spoke to him about, look at what I've seen on this. So I started geeking out, showing him charts, saying, look at the year to date on this one. Does anyone ever talk about that? He's like, no, they don't really talk about it. But I said, but they're doing it. You can see that's clear. And so I got really excited, and I said, you know what, Jay, I'm going to write the book about this. And then it took 4 years to do it, 4.5 years or so. But I did write that anchored volume weighted average price book because it took that much time for me to, get the evidence and to talk to enough fund managers who would quietly say, yeah, we do month to date orders, or, stuff like that.
Interesting. So it was really
So it just
get
evolved.
it
Yeah.
evolved, but it was almost like enhanced by spending time on the floor with Jay and hearing what people were asking about the market that made you kind of put some things in place together, which is really interesting because I think already in the episode today, if the listeners are really listening, the first question I asked you, you're a humble guy. Your answer just shows like you respect me, you respect other people, you're a nice guy to be around. I'm sure if we hung out and had a beer, but you don't take yourself as a king of the markets, as I have a better way of seeing it than you. And that humility, I think you would say, is one of your strengths, your superpowers that has kept you successful this long. So you couple that humility with what you just explained, which is stay curious, ask questions, get around other people. Just because I'm making money doing one thing doesn't mean he's not making money doing his thing. I can learn from him, even if it's what not to do. So for listeners, put that together, humility and curiosity, two important characteristics, right, Brian, for successful trading, long-term successful trading. Would you agree?
Absolutely. I mean, if you have an ego, if you've been in the market for any period of time and you have an ego about the market, you're either delusional
I was
or
going to say, I don't know how that happens. I don't know
you're
how
not
you stay in
trading
the
with
game.
real money. You're not
Right.
trading with real money
If you're in the
because the
game.
market will slap you down every time you
Exactly.
think you are the king of the market. So I have to be
Exactly.
very careful not to offend the market gods as well, because I know what happens when I start to feel like, yeah, I got this shit. I'm the man. I can do nothing but make money. I do well in the market, but my P&L will tell you I'm not the king of the market. I'm not trying to be. I'm trying to do reasonably, better than most people and maintain my consistency and objectivity in what I do. And, if I do that, then I know that, maintain my discipline, I can do well in the market. And I don't have to be, the winner of a stock trading contest or, win prizes. My P&L is the prize.
P&L is the prize. You said last time we talked, only price pays. And that is like the thing I tattooed on my forehead, bro, after we said it. You say these things sometimes that are just so simple, even that right there, like the P&L is the prize. Like I hope our newer traders can internalize that because I know it's what I would have probably not heard, right? When I hear someone like yourself talking, I'm just thinking about how much money does Brian make? He's probably killing it. He's probably got 6 Lambos. That's what the new trader is thinking. But the experienced trader, like you said, when you've been slapped around a little bit, these are those little nuggets. You mentioned your discipline. I want to kind of take an exit ramp for a second on a question. What's a day in the life look like for you, Brian? What's the daily routine?
Okay, weekdays, obviously, market
Weekdays,
days is what
obviously.
we're
Yeah.
talking about.
Yeah.
Sure. I wake up, so the market opens at 7:30 here. I generally wake up around, I don't know, 6:15, depending on whenever I wake up. And get a cup of coffee, try not to look too carefully at the market until about 9 a.m. Eastern time. The pre-market distracts me a lot. If I'm watching it too long, I might get tempted to do something. I might get tempted by those big moves in the pre-market. What I generally like to do in the pre-market is if I have a stock that I'm, long or short, and there's big movement in that, I'll take some profits in the pre-market, but I almost never initiate a new position in the pre-market. Days when, the CPI is out or something, I'm going to be there just to kind of watch it and maybe take a little scalp trade here and there if I'm feeling like a junkie that morning. But I set a lot of alerts on the stocks that I'm watching. So I'll have those alerts, see if anything is triggering the pre-market, and not necessarily do something about it, but maybe adjust that alert or just put a pause on that alert. So the first few minutes of the day, I'm obviously any open position I'm in, I'm looking at that, making sure it's not getting, if it's getting hit, then I need to watch it closely. One of my rules is I never sell within the first 5 minutes of the open. Let's say I have a stock that I opened, bought at 25 yesterday. It ran up to 25.80. I took a third of it off, and my stop is now 24.60. Well, if the stock opens at 24.50, 10 cents below my stop, I'm not going to panic and throw my stock away. Instead, I wait the first 5 minutes. I mark the low of the first 5 minutes and set my stop 2 pennies below that. So if now the if the low of the day, my stop was 24.80, it opens at 24.60, and it dropped down to a low of 24.51 in the first 5 minutes. My new stop, I adjust it lower to 24.49. And then I allow it time to go. I either get stopped out there. Most of the time, though, a stock in an uptrend, I would say 80 to 90% of the time, that is the low of the day right there.
I was going to say that's a higher low, and that's why you're putting the stop there.
It might actually be a lower low than what I was looking for, but it often ends up being a shakeout because we see so many times that an institution who didn't buy as many shares as they wanted the prior day, they wanted to buy 500,000 shares. So they only got 250,000 shares. They've got 250,000 shares they want to buy of this stock today, and the average daily volume is 700,000 shares. So what they'll do is they'll take 50,000 of those shares that they bought yesterday, or whatever it takes to get the stock down 50, 60 cents. They'll sacrifice those 25, 50,000 shares, and then when it's down there, they'll try to scare people, lure in shorts. They'll try to buy 100,000 shares down there. So they'll buy their 50,000 back, get long another 50 at these rock bottom prices for the low of the day. Then they'll complete their order for the 200,000 shares. And you see the stock goes on to finish at the high of the day. And I learned that because I kept getting stopped out over and over again and going, they shook me out. How can I stop doing this? If you just wait that first 5 minutes of the day, and it kind of sucks sometimes because sometimes it just keeps going lower. And, then the next 5 minutes, it keeps going lower. And, you've just got to figure a place to cut it. But so anyways, that's my first,
great
few
detail
minutes
there,
of the
though.
day. Yeah.
Really good detail. Thank you.
It's an important concept, I think, because I always tell people, never, ever, ever set your stop before the market opens. Otherwise, you're going to get your stock stolen from you, and you're going to get exactly what you deserve because you don't understand how the market works. You deserve to get taken advantage of. That's the way the market is. There's smart money, and then there's uneducated money. Get educated about how the market works. There is dumb money in the market, but that's
100%.
A different thing. There's uneducated money. If you don't know what you're doing, for now, consider yourself uneducated. If you keep making the same mistakes, it's either the definition of insanity or maybe just you're stupid. Hopefully not, because I think we can all learn.
Right. Absolutely.
So Austin, I might have, as that's happening, I might have a flurry. Let's say I set 30 alerts. I might have 15 alerts go off. And of course, I can't pay attention to those.
Right.
All of those. So if I don't have a stock that's, imploding on me, one of my favorite entry techniques is a stock that had just broken from a range yesterday, but maybe I missed it. It pulls back to yesterday's volume weighted average price. So again, let's say the same stock. It opened at 25 yesterday, ran to 25.80, and the VWAP from yesterday is $25.45. So first thing in the morning, it drops down to 25.46, 25.42. It's right around that prior day's VWAP. Well, the leftover buyers from yesterday will start to defend that level. Their programs start to turn on. And then as it gets back above today's volume weighted average price, that might be at $24.63, so 20 cents higher. Yep. That's when I know now for today, the buyers are back in control for today. They defended yesterday's level. I need to get back involved in this stock with a stop below the low of the day. So if I find some of those orders in the first, probably 10 to 20 minutes of the day is when those start to trigger. Those are my favorite entries. As stocks start moving, I'm paying attention to those on my, so I might have set 30 alerts, but I have 5 focus names.
Okay.
So I'll ignore those alerts for now. I'll look at my 5 focus names and say, here's what's going on. I need to reset my alert here because it ran up on the open, it pulled back, and its VWAP is at 2460. So let me set my alert at 2457, 5 cents ahead of that. So I'm able to watch it before it triggers and I'm not
Sure.
chasing it.
Yep.
So as I reset those ones, I'll go through my list of alerts and I'll say these 15 triggered. Let me see what's going on here. Let me take a look at these names. And I'll either reset the alert or, one or most of the time, 15 alerts went off. 13 of them were just junk. They were just, truly just alerts. Just
Yeah.
start paying attention.
Yeah.
Reset your alerts now. 1 or 2 of them, I might say, hey, I've got to move that up to a closer focus list. I'm going to put that over on my other screen with my 8 level 2s. And on those level 2s, I just want to be ready when they trigger again, the alert triggers again. I want to start looking at that level 2. It's the only time I look at level 2. I'm not trying to figure out who's the axe or, any of that stuff. Instead, I'm looking and saying, okay, the alert is at 2460 VWAP is at 2460. My alert is at 2457. As it hits to 2457, I look over to my other screen with my level 2 and I start watching that a little bit more carefully and saying, okay, what's going on in here? Is the speed of the tape increasing? Is there a big offer that might be just a bluff to kind of hold it back so they can buy as much as they can on the bid? Does price move to that size and run right through it, which is often, price moves to size often in a level 2. People are scared of that size generally, but price, moves to it and runs through it. So those are the things I'm thinking about as I reset those alerts. And then I have a Discord room where I'm, helping people, but I try to keep pretty quiet in there. I'm not there to tell people, hey, buy here, sell there.
Right.
Anyway, so about 11 a.m. Eastern, I post a video that just kind of updates the market and the ideas that we've been looking at and say, here's where the new stops should go for a swing trade. I kind of do all that stuff. And then, up till about noon Eastern when the market slows down. That's why we're doing this at noon. We started at noon today is because the market slowed down. My positions are there. I feel good about them. It's a quiet time in the market. I've got an eye on them on my screens, but I've got alerts set, but I don't feel like I need to be glued to the screen midday New York time.
Yeah.
So, then after something like this, or generally about 2 p.m., I will start to go through a longer list of names. And that list of names might be about 200 and, well, it's 179 right now, 179 stocks. I'll go through those and I'll look at each one of those on 6 time frames. And I start kind of prepping for the next day. I'm not a very good afternoon trader.
Hmm.
I'm not good at initiating trades in the afternoons for whatever reasons. Doesn't mean I won't trade them, but I'm
Yeah.
there. But I think my time is better focused to say, okay, let's start looking around at this market. Let's look at all the sectors. Let's look at all these stocks that are close to triggers. Let me go through all of the all 30 alerts and start setting those for tomorrow and just kind of coming up with my game plan and just getting familiar with everything that's gone on that day, in particular in the last hour of the day, I should say. And then, after the market closes, I've got, my duties that I do for alphatrends subscribers, which are a couple of videos. One is just a market review, and the other one is, here's the ideas we're in, here's where the stops are, here's why we're taking partial profits, where we are, here's some new ideas for tomorrow. And the market closes at 2 p.m. here, Austin. So I've got I try to be out the door if I can at about 3 p.m. local time, 5 p.m. Eastern.
That's
Um,
nice.
Go to the gym, maybe head to the mountains for a hike, or if it's winter time, just it's kind of ski season has just ended last weekend for me. I'll go do something, healthy outside and come back, eat dinner, and look at some charts in the evening, maybe do a little bit of work on a project or something. But that's kind of the day,
That's great detail. I mean, when I asked you that question, I think most people are like, oh, here we go. typical trader daily routine thing. But now you surprised him, Brian, because that was extremely well thought out, extremely detailed. But I do want to circle back to two things you said. First, I love that you mentioned the end of day, get off the desk, clear the head, get yourself ready for tomorrow. You said something that I'm hoping the listeners heard, and maybe they're picking up on it, and I'm hoping that this will be a good point here. You said, when I let the degenerate out of me, when I let that gambler out of me, when I'm just being a wild card playing those, like, the pre-market trades. Can you just speak for a second on someone with your amount of experience, how those emotions and that wanting to trade, the whatever emotion, FOMO, whatever it is that day, that can still come in, even when you're somebody with as much experience as you. So could you just speak on that for a second? And then maybe any real tactical advice of, like, what can a trader who is struggling with that do?
Well, ask yourself if something is actually helping you or not. Like, look at the results. Do you do well trading in the last hour of the day? I know that typically I don't. Um, I don't know if I'm a net. I haven't looked at the numbers in a while because my end of day trades are so low. But it used to be that I was a net loser at the end of the day. Not a big amount, but I was a net loser. So I looked at it and said, well, why do I want to lose money? If I'm profitable, from this time to this time, that's when I need to optimize what I do. I have not turned on any financial news media in years. I don't. I mean, I have a TV in my office. It just sits there. I don't even know why I still have it.
I have the same thing. I use it for golf on Thursdays and Fridays. That's all I watch
Yeah,
right there. That's it.
perfect. So it's a good background distraction, maybe to keep yourself from being too active in the market.
Yeah.
But I found that when I was watching CNBC, someone would come on and they'd mention a stock. I'd be bored. I'd say, hey, I'll trade that. I'm smart enough to be smarter than everybody else who's looking at it. And then I'd end up losing money. So what's the point? Is another discussion about somebody and their opinion of what the Fed's going to do, is that going to help me make money? No, it's not. There's just no one that smart. And there's a lot of smart people on there. I get that. But is that helping me to make money? What is my objective for sitting in this chair right here? To be the most informed person about every stock and every move and why it happened? Or is it a single purpose? The single
Make
purpose
money.
is, I'm trying to make money here. And that's what we do. That's what we're supposed to do. So just clear out all that bullshit, other people's opinions. When I'm active on X, I'm Twitter, whatever you want to call it these days. There's not a lot of people that I really listen to, or I follow people, but I don't follow them. I look at their streams, and what I like to do is look at them and say, hey, there's a person I respect, and they're talking about XYZ symbol. I haven't looked at XYZ in a while. Let me see what's going on there. I'm not going to read their opinion of the stock and that says, I think it should do this or that. In fact, most tweets are just bad because they never mention risk management.
No.
When I mention a stock, I say, here's my time frame, here's my stop. Make the trade your own now. That's up to you to do whatever you want with it. It doesn't matter what I do with it. I'm not trading your money. Why would that matter? So I mean, I get that people want to be told what to do, but I want to tell people why they should be thinking for themselves. And
How to do it.
here's the framework, right? I
Yeah.
hate it because everyone uses it and it's so old, but yeah, teach the man how to fish, not just give him the fish,
It
right?
stayed true for a while, for a reason.
Yeah. So
Yeah.
those are, some of the, I forgot where we got onto this question.
The question was just about, like, letting out that inner
Right.
degenerate of, like, I want to trade, which, like you said, if you want to make money, that has to overpower the wanting to trade. But what I've found is, like, even as I've gained more experience and I study, like yourself, guys, just like Crudeli, Pax, these guys that are older than me, they're so kind to share their insights on Twitter. It's not about calling every move. It's not about catching every trade. It's about winning and keeping wins and then doing your best to make losers smaller. So one of the quotes that somebody said on my stream today was, trading is not done, or trading is not made in volume. It's made in nuance. Meaning, like you just said, study. Are you doing well in the afternoon? Or are you doing well in the morning? Study your statistics, study what you're doing well, and that'll help you dive deeper into those nuanced details. Would you agree with that statement?
Yeah, and it's not something that I still do anymore, Austin, which is to keep a journal of each of
Oh,
your
we know,
trades and
Brian.
that sort of
Everybody
thing.
knows you don't back test, you don't journal. Everybody knows. They know you by now, and they think it's
But
crazy. They're like, "How does he not do that?" I'm like, "Because you don't understand how much experience this guy has, and knows himself so well, right?"
yeah, but it's important. I mean, I
It
will
is.
review. I mean, in particular on days when I lose money, I will sit there an extra 15, 20 minutes at the end of the day and say, that was really dumb. What was I thinking there? Or I'll say, what did I do here? Was it the outcome or was it the process? And if it was a process, then it was a dumb decision. Um, if the process was wrong. If the outcome was I lost money, but I knew my stop going in, I took a third off, I took some profit, reduced my risk, and then it reversed against me. That's a great loser.
Yep.
That's just the game. But I think it's important for people to be good record keepers of their trades, to be good. My personality, I never took notes in school. I would take you notes. Where's your notebook? Brian, how come you don't have any notes? And then sometimes I would highlight something in the book, but I just didn't take notes.
You retain it
Um,
well, right? It just stays in here well. You do have a good memory.
yeah, I had a decent memory, and
Yeah.
plus it just didn't interest me. I knew I wasn't going to go back and read my notes, so what's the point? It's just not the way my brain works. It might be
Right.
a little bit different, but I think most people need to, print out a chart of their trade for the time frames they were in, review it, and understand their process. Were they just involved in the stock because they saw a tweet go by from someone who won a championship account, 5 years ago, and now they're looking at going, well, that person, everything, they won a championship, everything they do must turn to gold. Or if they follow my stuff and say, hey, I respect Brian and like his stuff, I got to buy that stock. That's not the way it works.
No.
If someone says, Brian, I bought this stock because of your tweet, I just kind of roll my eyes and think, no, did you buy it because you saw my tweet and it made you look carefully and then you agreed with it and saw that for your time frame and your process and your risk tolerance, it made sense for you? Great. Then you made the trade your own. But you can't just buy a stock because somebody else is doing it and copy them. You'll never learn anything. You'll never be successful with any consistency. You've got to make the trade your own.
Well said. One more thing, and then let's go into screen share.
Yeah.
You have done a number on Cathie Wood, the wealth destroyer of all time, the number one wealth destroyer of all time. Last week, without even saying her name, you posted the stock she was trading and how they were selling, adding shares. It was dropped. Can you just talk about your, maybe just share your thoughts on her and this idea of buying stocks that are dipping just because they're dipping versus buying stocks that are strong, that are bouncing with strength? Because I think even to the day trading audience, the guys that are like scalping and doing short term stuff, this is very applicable because, like, I would say one of the big things you've taught me is don't buy something that's falling. Wait for it to bounce, buy the strength. And that's what she is not doing, correct?
Yeah. And listen, I have no personal issue
Of
with Cathie
course. Of
Woods. I'm
course.
sure she's a nice lady. She
Of
goes to
course.
church. She's
Yep.
all those things, but she's a horrible manager of money. This is a track record says that. I'm not
Right.
making this stuff up.
No,
I'm
no,
not
no.
trying to
Of
be
course.
mean. I think though, here's the main thing, Austin, is that
Yeah.
the media, for whatever reason, and you're not supposed to say things like this. Maybe it's because she's a woman and she manages billions, and there aren't a lot of those, so they're trying to prop her up, and that's great. Why not elevate someone a group of people who haven't traditionally, uh,
Been
gotten the
famous in
attention in a
finance.
group,
Right.
right?
Right.
So that's fine. And when she's doing well, congratulate her. But is the process correct? Because when you have a cost basis of $250 in a stock and the stock is 50, and now you're starting to sell it, that's just awful. Millions of shares. I mean, so I was talking about Zoom, and
Yep.
in Zoom, their cost basis arc, it's not just her. I mean, but she gets she gets the attention on the way up.
Oh, yeah.
She's got to own it on the way down. And the thing is that the media keeps kissing her ass. And the fact is she's lost 14 plus billion
It's
dollars
crazy.
of people's hard-earned money. These are people with retirement accounts who might have to delay their retirement because they've lost so much
Imagine
chasing
that.
this fund. And there's so many tragic stories behind that. So I pointed out to say more so is an example of learn to manage risk. It doesn't matter how big the portfolio is that you're running. You can have billions of dollars and you can keep dollar cost averaging into a bad stock. But eventually, no one is bigger than the market. Your buying alone can't hold that stock stop up. And eventually, as they say, if they don't scare you out, they'll wear you out. And guess what? She's getting worn out of Zoom. Zoom in particular, if you go back and look at the headlines and type in Cathie Wood price target Zoom, you'll see that in January of this year, ARK funds had a price target of $1,500
Oh
per
my
share.
God. That is crazy.
And they owned, I forgot the numbers, but I think they owned 11 million shares of the stock.
Wow. Wow.
And the stock was, I'm just pulling it up now. The
Yeah,
stock was at $70, $68 per share. They owned 11 million shares. Well, the stock is 57 now. It hit a new all-time low 3 days ago, and they own 3 million shares. So they had a price target of 1,500 when the stock was 68. Here it is 57, and they've sold 8 million shares all on the way down. The volume weighted average price since the beginning of the year is 64. So if
right.
she sold at the average price, she sold at about $64 per share. And how can that even be legal? I mean, it just, I mean, there's got to be some lawyers drooling all over this.
Oh, there has to be. But, just on the media comment about her, it is weird that it's not merit based, especially when it comes. But nowadays, with the way we see the media and how they portray people, nothing is about merit and performance. It's about checking some boxes. You need a woman, you need this, you need that. It has nothing to do with her performance. When, like you said, if you just look at it objectively, is she really the person that we should be propping up? You know what I mean? It would have been much
Yeah,
better.
and so again, people
Good.
just need to dig a little bit deeper
Just
and
got to do the
say,
research.
okay, here's a person who they're holding up. Why? Why? I mean, the numbers don't back it up. It's the same thing as your personal trading account and saying, hey, I lose money between 3 and 4 p.m. consistently. Well, just stop trading during those times and either redial, refigure it out, or figure out a different way to use that time and make sure that we can make our performance better, whatever it is, instead of continuing to buy stocks and downtrends. I posted a tweet about the ARK funds, their top 10 funds, or I'm sorry, the top 10 stocks that they own. I put this out 3 weeks ago because I was looking at it, I was just astounded. There
Hey,
was
what is
one
it?
stock, Tesla, that was up. 9 out of 10 of those stocks were down greater than 50%.
Oh my God,
I
bro.
mean,
So a monkey could have beat this, bro. Like literally a monkey picking random stocks might have had a better chance.
yeah,
It's crazy. It's
it's
crazy.
nuts.
Last thing, and then let's do screen share. You mentioned the XLM rebalancing last week.
Oh,
Apple
XLE, yeah, yeah.
XLE, thank you. Apple going from 44% of this ETF to 4%, basically, something like that. Very
Something
drastic
like that,
swing.
yeah.
Apple on Friday down for $3 a share at the last 10 or 15 minutes. Did you see that? Does that
I did.
rebalancing ever pay attention? Like, is that did you put that out as something like, hey, everybody, you should know this is coming because if you're in this stock, you might want to take profit beforehand? Was that like the underpinnings of that tweet, the under meaning of that tweet?
It was just to say, here's something coming. If you have a position you're concerned about, be aware of it. I didn't trade it. I looked at it and I just didn't see, I wasn't going to short Apple. It's in a strong uptrend. It's not
Don't
my,
short Apple.
it's not my time frame to
You don't
short
even like to
Apple.
short stuff that much, do you?
I really don't. No, I
No,
prefer, I mean, look what the market does over history. It goes up, right?
here goes up.
I look at a stock like Zoom and say, here I've been ripping on this thing, and why haven't I been shorted? It's just the most obvious trade
I
there
know,
is.
right? That's true. That should have been
Uh,
my next question is why do you fade Cathie Woods? That's what it should be.
right.
Anything Cathie buys, like, they make fun of Jim Cramer about everything he buys
Yeah.
turns around, right? Same thing for her at this point, but she just doesn't get the same heat, it seems like, that he gets.
There was one that I took on the long side, maybe a couple months ago, was TWOU. She
Okay.
owned this thing at like $8 per share. And I saw she was selling it, and she had just maybe, she had 10 million shares. She had 1 million shares left, and it was like 20 cents a share. I mean, it's just a disaster, just another disaster. So I was thinking, well, as soon as she's done selling this, I'm going to buy it. And I did. I bought it, I think, at 22 cents. And like in the next 3 sessions, it went to 36 cents. So I think that there's a play in Zoom, for instance, or any like what DOCU, I think is another one she owns,
Is that
DocuSign.
DocuSign? Yeah.
Yeah, and she's still got quite a few of that one, but she's getting
Yep.
close towards maybe capitulating in Zoom. And I think as soon as that's done, then a lot of the hedge funds that have been shooting against her position, trying to drive it lower and
They'll
drive
come
her
in and
out,
buy it.
they'll come and cover their shorts, and that will provide an immediate, bid for it. Other people will recognize what's going on, and you'll probably get a 15-20% bounce as soon as she's done selling it. It's just,
Sorry, I
I
don't
mean,
mean
it's
to
just
laugh. It's
market,
just so it
but
is. It's how the market works.
it's market dynamics, and either laugh at it and say, well, that's crazy, that doesn't make sense, or say, hey, there's something that maybe there's a strategy here, maybe there's a low risk way I can trade that stock for a bounce.
Yeah.
Or maybe you start looking at her portfolio and say she's just starting to sell this stock. They're in this terrible position. When it rallies up and starts to roll over, I'm going to start to short this. Maybe I'm going to buy some 6-month out puts because it typically takes them 3 to 4 months to get out of these large positions.
Exactly. It's a great
There's all
point.
kinds of ways to game it. It just depends what's your way of looking at the market. What is your risk
Right.
tolerance?
Your
Do you have a
thesis.
preference? Do you have a preference for shorting? Go shoot against that list. It's a great shopping list.
That's true. I have a guy, his name is David Capablanca. He's known as the
Yeah,
reverse long. Yeah, you know David. He's a
yeah,
Tim Sykes student. I'm speaking at his event in LA in October, and he does something. They just did an event in LA this past weekend, him and Roland, and it was sponsored by a company. I think it's Cobra Trading or something, and they can help you
yeah.
short. So it's like if you know that's the angle
Mhm.
you want to take, like you said, see your thesis all the way through. Stick to your thesis. I think that's like the big lesson that everybody could take from this is like, look, Cathie, she will do what she may do, but just because she's hyped up in the media doesn't mean she's right. And you can still do your own research. You can still study her stats and still figure out for yourself if she's somebody you should really be listening to. And the same thing goes for her and all the other people that are running hedge funds, right? From the CNBC guys to the guys that we don't hear about. We lost Jim Simons this year. It'd be a lot better if we
Mhm.
focused on him and learned from him rather than her, to be honest. Because if you look at his performance and the funds that he started, it is almost unbelievable, right?
The thing is that she becomes a target as well because she
Of
has
course.
gone and said, I want to be different. I'm going to make my fund transparent. I'm going to show people what I'm doing. I'm going to show them my research. And, that is a nice thing when the market's going up and it's working for you. But when it's going
But what?
against you, there are all kinds of hedge funds targeting that list and helping push those prices lower for the sole reason that they know she's in trouble with this big position and they're trying to grind her out of it. And
Right.
that's
Squeeze her out.
that's it. Yeah.
Yep.
It's
Yep.
it's it's a long squeeze. And we always hear about short squeezes. The shorts are getting squeezed. Well, the longs are getting squeezed out of this stock. And it's an easy target because we know this person is down 80% in this stock and they can't stand the heat any longer. It's time for them to, and you can see what they're doing. You can see that they're selling the stock, which is just kind of bizarre, really, that they allow that level of transparency.
It
It's
is.
completely backfired.
Again, and then flip that to versus Jim Simons. No one really knows. Not only
Right.
what is he doing, you can't even get into the funds. You have to be family, friends, or work there, basically. That, from what I understand, to get into his funds, some of them. So it's like it's the complete opposite, where it's secret, it's locked up, and look at how much money they've made, right? Like,
Right.
yeah. All right, let's do a screen share for the. I want to be cognizant of your time. Give me 5-10 minutes of screen share, Brian, then I'll let you go. And I know the
Sure.
audience will really appreciate it. Can we talk QQQ and Nasdaq first? Because I know you spend a lot of time with the U.S. indices, and maybe even if we can touch on a little bit of Bitcoin, would be awesome too.
Yeah. So that'll require a different screen, but that's fine.
Okay.
So the cues, I mean, on the left, we have a daily time frame. I've got a 20-day moving average, a 50, and a 200. So that's 20, 50, 200. This is the year-to-date anchor.
Yep.
And you can see it hasn't been that important for the cues. Whereas the SPY, this current rally began right on a test of that year-to-date anchored VWAP. And
Yep.
that's where it really took off from. So
Yep.
we'll go back to the cues, though. We're still in, you can't look at this thing as anything other than an uptrend, higher
Nope.
highs and higher lows.
Yep.
Some people get stuck in the weeds over here on the 30-minute time frame or on a 2-minute time frame. And that's
Yep.
fine. I mean, because right now, we have this pattern of this high, a lower high, we have this low, and we have a lower low. We have
Mhm.
that flat to declining 5-day moving average. So to me, it looks like, we're probably going to head down towards this anchor. That looks like a good place for it to come test right in here. And in the next couple of days, as this 20-day moving average comes up, maybe it's going to even just continue lower, maybe a little shakeout, and then back up like this, and then new all-time highs. A trend once established is more likely to continue than reverse. That's a tenet of technical analysis. So I'm not looking to call a top in this thing. That's never my goal. I'm looking at it and saying, we've got an uptrend here. Short term, I don't want to buy this thing. This is probably a pullback. It's probably a dip. But if I bought on that basis over here as it touched the 5-day moving average at 481, well, I'm down 4 points. I'm down 1%. What if I take a leverage position? What if I buy short-term calls at that point? They could be worth zero. So I want to look at it, and we can look at NVIDIA, because here we see, we're at the 20-day moving average, but more important, I think we're at the anchor from this gap right here. And we've just come down pretty hard, pretty fast. But is it time to buy this stock right now? We're at a 20-day moving average. So I look at it on a shorter term time frame. Let's say a 2-minute time frame. Actually, this is a 1-minute. And I say, well, we're below Friday's volume weighted average price. We're trying to bounce in here as we touch that anchor on the larger time frame. So let's go back and frame that up with this anchor right here. Okay. So we're touching that. And actually, if I put it right on that, you can see we kind of pretty much nailed it, right, to the penny.
Literally.
So when we look at that, that's our level of interest. We say, okay, here's a level where we've dropped from 140 to 120. It's dropped 15%. It's the strongest stock on the planet. It's probably due for a bounce. It's at a 20-day moving average. Is there evidence the buyers are gaining control? Well, we got a little bit of a bounce there at that point, but I wouldn't have bought there. Instead, we see we've come up, and today the sellers are still here at the daily volume weighted average price. So there's still net sellers defending that level. What would change my mind? Maybe we get, maybe we have a little shakeout under here, rally back up like this and run, test that VWAP. That becomes support, and then buy right here.
22s, 23s.
With the intention of maybe it heads up to the 2-day VWAP. And if it runs up to the 2-day VWAP, sell half of my position and maybe hold half of it for an overnight and start to think, well, maybe we can bounce up. So here's our 2-day volume weighted average price right here. So if it runs up towards that, great, I'll sell half of it and put my stop underneath these higher lows. And maybe tomorrow it runs up to the anchor from the all-time high, and that 5-day moving average will come bearing down on it as well. And then maybe it does this over the next few days, makes a slight lower low, and then we get a real squeezer. So undercut this low, suck in some short sellers, get rid of the weak holders who weren't smart enough to sell as it started going back down. Instead, they're holding it. They buy in here or here, and they say, okay, well, my stop will go under there. So they'll set, so they'll run
easy
those
to
stops.
see them. Run them out.
And then as it recovers, the new entry would be right here, a tentative entry on a short-term time frame. Again, looking for it to maybe run up towards that 5-day moving average. By that point, that 5-day moving average is going to start to look a little bit like this and maybe start to flatten out towards the end of the week, and does this. And then, the big move begins from here. And then we start to see these higher highs and higher lows. And just keep raising your stop underneath those higher lows that are most relevant for your time frame. Or
I love this.
It just continues to break down, and you say,
and you're not long.
Fine, there's 5,000 other stocks out there. I don't have to trade NVIDIA to make money.
Love that. Can I ask you 2 questions? Can you zoom in on that bounce off of the purple VWAP at the bottom there, where you have that green arrow, the second one there? A lot of the time when I'm long, let's just say in this example, that was like a daily VWAP, and it's bouncing, it's been above it, comes back and hits it. What I'll do is I'll use the high of day VWAP. In this example would be the red all-time high VWAP. I will use that as a take profit, because I know how many people will come in and sell there. What do you think of that? Do you think, should I be trailing? Should I be taking full out there? How do you like to take that type of a trade?
I like to take part of it, because sometimes it will continue to run through there. And if I've got some time left in the day, I might as well give it the opportunity to continue to run. But at that point, I won't have my stop below the low of the day.
Oh, no, you're locked
way
to
down there. It's way up here instead.
So you can't
so
lose
on
any
the balance
money.
that is. In fact, speaking of David Capablanca, I was just on his podcast last week,
Oh,
and
nice.
we were talking about these exact concepts for a day trade time frame. And I was saying, for instance, if this was a 1 minute chart of today, that would be your high of the day, which might have
Yep.
occurred at 10:38 a.m. And this
Hmm.
is 9 a.m., right?
Hmm.
9:30 a.m. So the concepts are the same regardless of time frame, which
Yeah.
is, I'm glad you brought that up, because it's always the
It's
same. It's
fractal.
fractal. Yep.
Yep. So like in the inverse of that idea, if I wanted to be short NVIDIA, a retest of that all-time high VWAP could be maybe defined as a cheap short, because if I shorted at the retest of the red VWAP there, yep, and it breaks that VWAP to the upside, you say that's buyers stepping in, taking control. Get out of your short. So if you were looking to short it, that would potentially be a great place to do it because it's a cheaper short. Is that a fair way to think of it?
I would say absolutely that you would
Okay.
short at this green arrow right here with your
Mm-hmm.
stop right here,
Yep.
because that's the most recent relevant lower high with that anchor from there. So you're saying, okay, now it's rejected at that anchor from the high of the day, high of 4 days ago, whatever your time frame is, to short here as it's bouncing from it, not as it's touching it, because it might continue to do this, but instead as it turns lower from there and it breaks a very short-term low, then we want to short there with that beginning of that momentum, and say it's either going to do this or it's going to trap me, run back up, and I know my stop is right
And I'm
here.
out.
I was looking for a test of this low,
Yep.
and my stop is right up here. That's a 1 to 5 risk reward.
You
So
take that.
you take it, yeah.
Take
And
that.
if you're wrong, you're wrong.
You're quick wrong. That's the cool thing is you're quick
Yeah,
wrong. Can you go to
quick and
NVIDIA on the
smart.
1 minute? Can we look at
Yeah,
that 1 minute one real fast too? Because I think the inverse of this, yeah, or the 2 minute. So now on the inverse here, what we've been trying to look at is your green arrow to the left at about 10:50 a.m., the low of day. If
yep,
you put a VWAP on the low,
yes,
could I buy
yes,
the bounces of that VWAP in the inverse, like that as it breaks underneath it at 11:30 and then comes back above? I could buy it maybe 19. Yep, exactly. So like 119.98, that first break back above the low of day VWAP, and say, yep, right there. If we slide back under and take out that new higher low, sellers are
yep,
definitely in control. Get me out of my long. But if I'm
yeah.
right, I've got a cheap long and I can dollar cost average potentially and get a really good price over the course of the next few hours.
I agree with that 100%. Yes.
Cool. All right, good. So I'm seeing this the right way because I have a couple of guys that they don't love to trade with trend. They do better with reversals to their personality is what they think, and
Hmm.
that's what they want to see. So what I've been trying to do is still help them incorporate a VWAP to give them the who is in control answer, and then just let them use that for their timing. Whereas like here, everything says be a seller. You're under the daily VWAP, yesterday's VWAP, we're moving lower. If you're going to trade this to me, I'm looking at this and I want to sell something. I don't want to be a buyer here, similar to you probably, but some guys do. We're beat down on NVIDIA, down 15, 20%. Like you said, whatever, let's see if we can bounce. How do you then find the bounce? This is what I'm saying. Low of day VWAP as the guide to tell you when sellers have stepped in and when to get out of the long. Is that a fair thought process?
Yeah, and then you look at that purchase here and you say, okay,
Mm-hmm.
well, I want to reduce my risk at the daily VWAP.
Yeah,
So as it
exactly.
comes up there, and then you're either going to continue to hold that. I think right here is a great time to pay attention to say, is this going to be a little bit of a shakeout here? And then, we've given it enough time to go sideways in here during the course of today that we still have the opportunity for an afternoon bounce up to that 2-day volume weighted average price. That looks like to me at this point at what is it, 103 in the afternoon. That seems like the highest probability trade to me, because again, when we go back to the daily time frame, we're on the anchor from this gap, we're on the 21 EMA, we're on the 20-day moving, simple moving average, and
Give me
those are
support.
things that people often look at. We've strongest stock in the planet drops 15% in just a couple of days. It's due for a bounce, and if it doesn't bounce, then you either don't get involved until it gets back above that VWAP, or you buy a little here with the intention of not getting maybe your stop under here or stop under the low of
Right.
the
So you don't
day.
get shaken out. Yeah.
I'm not ready to be long yet because we're still
No.
trapped below the daily VWAP. But I'm interested in this for an afternoon push. Could get a couple points in there. And then if you want to trade, with a little bit of leverage, the not NVD, NVDL, um,
Yeah.
Maybe that one goes from 68 to 72
Right.
or 71 and a half.
Right. Can we look at SPY real fast? I want to show you something.
Yeah, what time frame? This shorter
We could
term?
look at yeah, we could look at a 1 minute today.
Okay.
So I've worked with this company, Get Edgeful. They do statistical analysis on stocks, futures, forex. I think you would really like it, just because you're a little bit of a data nerd, even though you don't do your back
Mhm.
testing. You and me still we like stats. It's just numbers. I don't care about opinions. They have a gap up and gap down report. So what I'll do on ES, because I can run it on the future contract and check the futures, not just SPY, we could see that today, because of a 8 point gap down or so on the futures contract, that gap fills like 76% of the time. So what we've been doing is coupling that with the 930 open VWAP. If you look, I think it's at 946 or 947 today. We take out the ES, probably looks very similar on SPY. We take out
Yeah,
that opening
probably.
VWAP. Yep, I see it right there. And that's where we then get the push to close the gap. So it's
Yeah.
really cool to see when you can take a stat of like, hey, this should close that distance 80% of the time. Cool. Then what's the buy trigger? Well, we wait. We saw the 15-minute opening range set. We saw that low hold twice. Then we see the buyers step in over that daily VWAP. That's when I know buyers are here. Now let's go close that gap. And that entry works beautifully today. And now the
I
market's kind of
like it.
sideways since then. But that was the thesis of this morning's trade. So it's like putting the VWAP together with a statistic that kind of gives me a direction. And then, of course, I'm like you. I don't like to short. I like to be long because I don't like to bet against America, really, is what you know what I mean? Even on a day
Yeah.
trading thing, even on the
And
day trading
and
side.
and so far, I mean, it's nice to be aware of the anchor from that peak, because so
Yep.
far, since it's only 3 days old, 2 days
Yeah.
old, but it's been a place where sellers have emerged. So that
Absolutely.
tells me that maybe we're gonna, do something like this and come down to this anchor. And if
Yep.
that one doesn't hold, well, then from the beginning of the month down in here. And I could see something like this happen in the next couple of days. And it wouldn't be a reason for big concern, not when you have a trend like this.
No, definitely, especially on a week like this with not a lot of news, right? Like I think the biggest thing we have is the GDP news coming out on Thursday. So it's not like a busy news
PCE
week with
too, right?
Fed. I think there's some PCE. Yeah. So it's not
Yeah.
like I wouldn't be surprised if that happened either. Do you look two final questions? And I really appreciate you running a few minutes extra, Brian. Do you
Yeah.
look back at those gaps where you're putting VWAPs and will you say um all gaps have to fill? This gap has. Do you buy into that? Like, 'cause so many people talk about this earnings gap and it's got to fill this earnings. Does it always fill, or like is it stupid to think about because it's like, of course it does with enough time? You know what I mean? It's like it's a weird question with a couple of variables. So I don't think it's as clean cut as people say. But what do you think about that? Gaps
It's
always
not,
fill.
yeah, it's not as clean cut as people say,
Okay, that's what I thought.
because people would say, I'm shorting here until it closes that gap.
Oh
That
well,
was
you're
last
bleeding.
November.
Yeah, you're out. You're
Here's
underwater,
this one
brother.
in November too.
Yeah, you're
These,
still underwater.
eventually will these gaps get filled? Sure. Let's talk in 2026, 2027, and you can
Maybe
say, hey, now I'm closing my short because the gap is filled.
after 80%
Well,
drawdown.
again, the markets will do the most obvious thing in the least obvious way.
There you go. Just like Linda
So
said.
just
Yeah,
like your statistics, you know how to
yeah.
use your
It's
statistics. It's not
probabilities.
88% of the time. So I'm going to do this and expect 8 winners and 2 losers, and that's good. I'm just going to take every single one of them. No, you're going to use that and say, here's how it backs up on the chart. Here's how I'm going to manage risk. And here's how I'm putting my trading plan together. Then maybe it helps me just get a little bit more confidence, similar to if I see the fundamentals are what a fundamental growth stock manager looks for in a name. It's going to give me a little bit more confidence to hold a stock a little bit longer rather than just based on the chart. It's just another piece of information that tells me maybe I have a little bit better odds of success here.
Yep. And as we've said in our first episode, and we'll say it again today, nothing in trading is guaranteed. You ever, Brian, you've been trading a lot longer than me. Anything you find that's a certainty? You want to share any certainties with us today to finish?
As soon as you got it figured out, you're going to get punched in the face.
Just like golf. Same thing.
Yeah.
I went golfing with my buddy for the first time. He goes, I think I'm getting this. I said, yeah. When you said that, he's a trader too. I was like, when you said that in trading, how did it go? Right. Same thing. You lose a little bit after that. So, last question for you, Brian. Really appreciate everything again, man. I love this. It's like a coaching session for me. What's coming next? I know you told me before we started, some stuff on the alpha on your back end on your website. You're going to be doing a lot
Mhm.
there with the alpha trends guys and your service there. But what else? Do we have a new book working? Anything else cooking in the
No, I'm
background?
I'm still recovering from that one.
I was going to say, I
Books
know,
are difficult. I
dude.
really don't see a new one. At some point, I might update my first book, but that's still a bigger project. than I want to tackle. So I don't really, I'm starting to talk to a couple people about doing some black box program type stuff with some of these
Cool.
concepts and doing some back testing of things, and maybe letting a little bit of money run auto trade type
That'd be
thing.
cool. That'd be
Yeah.
cool. See how that goes. Okay. I'm sure the audience will. I mean, come on, it's AI, it's NVIDIA. Got to get with the automation, I guess, right? That's what they tell us. Do you think that the AI is going to get rid of us completely, or think there'll always be a home for us dirty day traders to make some money?
I'm a big believer in HI, human intelligence. I look at things that I know to be true, and I'll type them in AI and sometimes see something completely different than what is true. I think it's a great tool. I use it, but I also think that, lazy people will be exposed when they post their AI articles,
Yep.
and, by people who just fact check rather than
Yep.
just believe, hey, this she's a woman, she's a great fund manager. Well, that was the narrative 4 years ago when everything was going up. But then when things, these growth stocks, the COVID stocks started declining, has the story changed? Is that still true?
Right.
And you've got to, use common sense and just, look at your P&L. Is it working? Is it true? Is it still true that buying this bounce off the VWAP works? Well, I lost 9 out of 10 trades, so maybe I've got to start looking at something else.
I love it. I love it, Brian. I can't thank you enough. I had messaged you a few months ago to do this in person. I just haven't made it out to Colorado with the move and some family stuff happening. So,
Yeah,
but
yeah.
as soon as I can get out there, I owe you a couple of beers at least, and you owe me a couple of ski tips because I'm not the best. I can hang, but I'm sure you tear it up better than me. So me and Jake will have to do, like I was saying, we'll do a little round table, maybe get some skiing in, but I can't thank you enough. I'll make sure we have the
Sounds fun.
links to the book. I'll have the links to your website, the Twitter, everything you do. I really can't thank you for giving me the time. And I know I speak for everybody in the trading community where we really appreciate the videos you do every day and the tweets about Cathie and the tweets about your trades. It's just all really helpful. So thank you, Brian.
Austin, likewise. Great. Keep doing all the great work you're doing, buddy.
I'm going to try.